Hi, Mark Gordon with GoldenTicker.com on Wednesday, March the 9th, 2011. Wanted to run through some charts of the market and some leading stocks to show you what's going on. Investors Business Daily, IBD, has got the markets now in a correction. And you can see this is a daily chart of the NASDAQ, and you can see we rode this channel up from September all the way through here till end of February. And then we came down here and broke the lower channel line. Held here at this blue line, which is the 50-day moving average, and we're kind of trying to hang on to that as we move up here. So for the last several weeks, getting support down here at this blue line. One thing you'll notice here is that as we came down and rallied back up, we could not get above 2802. So the 2800 level has been kind of resistance for the NASDAQ. And if we draw a little trend line here across the tops, this will be our new point of resistance here, which is coincidentally going to be here at this red line, which is the 21-day moving average. And that is currently at 2781. So a break above that would be bullish short term for the markets. And we'll go ahead and draw a little line here. So you see we have this sort of triangle forming here. A break to the downside will obviously be bearish. A break to the upside will be bullish in the short term. So for now, the NASDAQ is under pressure in a correction, and the trend, short-term trend now, is down. We're going to fly through some of the leading stocks right now real quick, just showing you Apple in a nice uptrend, still in a nice uptrend. A few weeks ago came down here and tagged its 50-day moving average, got solid support here for 3 days, and has now rallied back up. Not to new highs again, but rallying up here. So Apple hanging tough. Taking a look now at a daily chart of Amazon.com, not looking so good. Rallied up here through January and then sold off very, very quickly. Came down through the blue line 50-day moving average, got a bit of support here at the 100-day, this green dotted line, rallied back up almost to a new high, just 20 cents short of a new high, and then came right back down. And now we're going into fresh new lows here, well below this green dotted line, the 100-day moving average, and of course well below the 50-day moving average. So Amazon.com in a lot of trouble. This is an interesting stock. This is Acme Packet, one of the leading tech stocks, and lost support of this red line today on a pickup in volume. This is the 21-day moving average. And on a daily chart, we still look good. We're well above the 50-day moving average. You can see the trend that's in motion here. But when we go to a weekly chart, we see something interesting here. See these two tight bars here? Look like two T's here. That's called railroad tracks, and it's when you have the closes are very similar, and you have tails on them like that hang down, and that's a topping sign. So Acme Packet may be topping out here. Here's a leading retail stock, Chipotle Mexican Grill. Put a nice cup in here, broke out in mid-February, and then has pulled back, got support here at the blue line, the 50-day moving average, and is just kind of hovering and waffling around. So kind of buying its time here, Chipotle, but still hanging in there. Here's Concho Resources in a solid uptrend from September on upwards, hitting new highs a couple of weeks ago. Now going through a bit of a correction, volume coming in here. Slicing the 20-day moving average today. Looks to be headed down here to test its 50-day moving average again. We'll see how it looks going forward. But as you know, oil prices are very high, and Concho's in the right area. But the markets are under pressure, so anything can happen. Here's a chart of Las Vegas Sands, which had a big run late summer, on up to $55, and now has been drifting sideways. And it looked like it was going to break out again, but then it broke to the downside here on some big volume. And it's losing a lot of ground here below the 100-day and the 50-day moving average. And you can see here that the moving averages are rolling over. Not a good sign. Here's an example of a great monster stock, Netflix, breaking out of a cup-shaped base here back in February, hitting a new high, and then collapsing right back down through the breakout point. And now yesterday slicing the 50-day moving average on a gap and on big volume. Not a good sign. And all the way down here at the 100-day moving average, testing that. And what's happening is that Netflix may be having some competition from Facebook in the online video renting arena. So we'll see how far this correction takes Netflix. But for now, looking very bearish. Another monster stock losing support of its 50-day moving average, which it's had for many, many months, is Skyworks Solutions. And on big volume today, not a good sign. That's a sell signal right there. Here's a leading networking stock. This is Altera, and losing its 21-day moving average here on big volume today. Looks like it might be heading down to test this 50-day moving average, which is at 39.26. Uptrend still intact, however, but not a good day for Altera. Here's a chart of Baidu. Baidu broke out here in early February on a big gap and nice big volume, ran up to a new high and then backed down through the buy point again. Still above its 50-day moving average, this blue line. So looking good there, and getting support from this trend line here as it fights a battle to move higher. So Baidu looking strong still. This has been a strong resource stock. This is Cliffs Natural Resources, losing its 21-day moving average today on a pickup in volume and some pretty heavy volume here. Uptrend still intact, however. Looking maybe to test this 50-day moving average, which it has not done since last year in mid-November. So Cliffs trying to hang on there. Another monster stock trying to hang on is Lululemon. For the last couple of weeks, been trying to get support here at this blue line, the 50-day moving average. So far so good, but kind of doing nothing, just drifting sideways, bouncing up and down between the 21-day and the 50-day moving average. We are in a correction, so the most likely occurrence here will be a break to the downside. And last but not least, here is Priceline.com. Very good chart here. Well above this blue line, the 50-day moving average, which has gotten support from here, and it's not even on the charts here the last time it even broke that. So tested support here at the beginning of the year, been running up, actually had a little slice through here for one day and then gapped up. This is right before the earnings were reported. This is a lot of nervous money here, kind of hedging their bets against the stock, and then they reported just fantastic earnings and sales. Gapped up, a little bit of pullback here on lighter volume, and then off to new highs again, and well above even its 21-day moving average. So Priceline looking real good. But the bottom line is that the markets are in a correction, and this is not the time to be taking a lot of risk on. It is a time to be selling your weaker stocks and raising some cash and kind of waiting out the storm here. Okay, that's it. Thank you.